Welcome back to the Industrial Real Estate Show. I'm very excited for this bonus episode to talk about a topic I get asked about all the time, and that's for book recommendations for those in the commercial or industrial real estate industry. As most of you would know already, it's very difficult finding good books and resources out there. So I was very excited when I came across this book called Creating Trinity by Gary Chesson. It's a fascinating book where he details his journey starting a commercial real estate brokerage with two of his partners, and then a few years later starting an investment group where they've over time have done over $4 billion in transactions, and they have about 28 million square feet of industrial and office properties under ownership, including a number of developments that they've done. So Gary is the real deal when it comes to being a successful broker and an ultra successful investor. He's retired and he wrote this book reflecting back on the journey and some of the challenges that they had and how they created a culture, and just an unbelievable story on his career. And I blew through this book. In fact, I am such a big fan of this book that I will put it at the top of my list for anybody looking for a commercial real estate book. This is going to be my number one book on how great of a story he tells going through this whole process. So I started reading this book and I immediately knew I had to reach out to him. I was prepared to call him 20 times if I had to. I was prepared to fly to Charlotte if I had to try and get him to do it. And he was very gracious to accept to do this interview. And I asked him just a number of questions about the book, but also just his career, some of the challenges that he had, some of the friendships that you might be surprised to hear about. And we just had a really good conversation. So I look forward to sharing this with you. And then I've got a quick note at the end as well. So stick around till the end. Well, hello, Gary. Thank you so much for joining me on the podcast.
Glad to be here. Thanks for, thanks for having me.
Well, it's an honor to have you on because I came across you by reading your book. And I think I've got a mirror image on my screen, but the title of it is Creating Trinity, Blueprints of a Real Estate Entrepreneur and an Investor. And you have to dig into it a little bit to see that you've actually invested in over $4 billion worth of office and industrial real estate. I think at one point the numbers might have fluctuated, was about 28 million square feet that you guys have invested in. You've developed industrial projects as well. And you started as a broker, as an office leasing broker, created a brokerage with two of your partners, Peter and David. And then that also evolved into being an investment company. You detailed this in great detail in the book, but could you all just highlight that story as well, from going from being an office broker to building these two giant companies to now being in retirement mode?
Yeah, my motivation for writing the book was really two things. One was to really tell the story of the unique partnership that the three of us had and the culture we built at both of these companies. I was listening to a podcast several times, Guy Raz's How I Built This podcast. And, he interviews a lot of entrepreneurs about businesses they built and the struggles they went through. And I realized I had a story to tell. And when I was coming up in the business, there were very few places, and we talked about this briefly a minute ago, where you can go and read a book or go online and find what it's actually like to start a business, to build a platform. And I wanted to share that with the next generation, the 30, 40-year-old or 25-year-old, coming out of college, or young people coming out of college, what this great industry offers. And that was really the motivation to write the book.
And one line that you had used a few times in this book, and this is, I don't know if it'll show up, but I dog-eared a ton of pages on this book, and I highlighted a ton as well, because I found it so fascinating on how you wrote it as a story, as opposed to just a bunch of industry jargon and points here that I've read a lot of those books that read almost like a textbook, and this was just an enthralling story. So I highlighted a bunch of it, and one that stuck with me was the 1+1+1 = 7. And that was in reference to yourself, Peter, and David, who passed away, sadly. But what was the intent on that? And I think it's pretty clear that there's a synergistic element there, that the sum is greater than the individual parts. But that clearly was a big part of your design when you were making this company and building it to what it is today.
Yeah, like a lot of brokers and real estate professionals, we've all worked for firms where, I guess, early in my career, I was what I would call a lone wolf, working for a firm and had my own business, going out and executing it. And I did well, but I sort of realized later that by having business partners, and I sort of saw this, we were able together to achieve so much more than we could individually. And, that translated into our culture. We had different business lines where that, in different offices where that synergistic concept applied. But it was one of the neat things about my career that I look back and appreciate, and didn't really realize in the early years that was a possibility.
So what was that initial moment like when the three of you decided to start Trinity Partners, and you left the comfort of being at established brokerages, and now you were encumbered by having to do this on your own from the start? You clearly had to have involved a lot of other people in your lives to get their input and their opinions on what to do and perhaps what not to do. But what were those early days like when you made that leap?
A lot of people think, oh, it must have been really scary. And maybe I'm glossing over it. Surely it was. Fear is the greatest motivator. As I talk about in the book, most people falter when they've had success, keeping that success going. But fear is a great motivator. But for us, when we started the business, all we really did, the way I like to explain it is, I spent 7 years learning the trade at other firms. And so when I started my own firm with David and Peter, I was just taking one hat off and putting another on. So I was still doing the same thing. So there was a lot of comfort in that. And it was fun and exciting at the same time, because we were finally going out and doing our own thing.
And you and Peter were both active in the office space, and David was on the industrial space. I'd like to get your thoughts outside of this book for a second, just on where you see the economy right now compared to where it was when you guys started. And you started building up, and before long you were into the Great Recession in 2008, 2009. Where do you see things right now in today's economy versus what you were facing building Trinity at that time?
I think one distinction I make in the book is that to really understand our industry, most people think of the property market side of our industry, and the capital market side is just as important. And understanding how those two intersect are really important, understanding the whole picture. And back in 2007, because of David's capital markets background, we had pretty unique insight into what was happening behind the scenes with the banks, with the equity providers, et cetera. And we could see in 2007 that there were some clouds on the horizon. 2002 felt that same way. We saw clouds on the horizon, particularly with the office business. Industrial has been just white hot, which I'll get into later, and that. Mm-hmm. But the office business has been tough. Now, 2023 feels a little like 2008 in that we're starting to see some of that distress unfold, particularly in the office sector. In downtown Charlotte, we have 5 office towers, one of which that are nearing default, one of which has already gone back to the lender. 4 more are on the brink of going back to the lender.
Hmm. And there's similarities for sure. And I went through the Great Recession as a broker myself, and there are similarities, but there are also some stark differences I've found where there's more forces at play, or different forces, perhaps I should say more accurately. There's different forces at play. Pandemic has caused a shift with that work from home being a lot more popular. I'm surprised at how long it's taken the workforce as a whole to come back. It still seems, going across North America, there's anywhere from 25 to 50 to 60% of people going back to the office, whereas 2019 those numbers were double that. So there's still a lot of challenges in that office space. Where do you see that going? You spend your career in office leasing. Do you see an opportunity for companies to bring workers back, or is there going to be an inherent culture shift, a culture battle between those that want to work from home and the employers that would love to have them back? Any insight on where you see that going?
Yeah, boy, that's a complicated story.
Mm-hmm.
And I'll give you a sort of medium length answer. Nobody knows is the short answer, meaning, I've been under the belief that when the job market got softer, employers would say to the employees, look, you've got 2 options, take it or leave it. Meaning, if you don't come back to work, I've got 3 people right behind you that'll take your job. I also think that it's really tough for these businesses to build culture if everyone's at home in their pajamas on a Zoom call. So, fundamentally, I think office isn't going away. When do they come back? When do employers make employees come back to the office? I don't know. And that's going to be somewhat industry dependent as well. The tech business, where they're on their computers a lot, they may not need that as much. On the capital market side of office, though, there's this perfect storm. I like to say office has stage 3 cancer, meaning there's this perfect storm of negative things. You've got low tenant demand, you've got low occupancy. For the office building owners whose loans are naturally expiring and coming due, you've got borrowing costs that are twice what they were a few years ago. You've got lenders that don't want to touch office. They're like, you go to refinance your loan, the lenders are saying, no, thanks, I don't want it. And then your existing lender says, well, I guess I've got to keep it if I don't want to repossess it. And if I do that, then you've got to pay down the note. And so there's just this perfect storm of negative factors going into office. And then to throw one last bit of cold water on office, the buyers don't really want it because there's so much uncertainty on all these fronts.
Yeah, I think you hit the nail on the head there. That's great to get your insight on that. And as Charles Dickens said before, it's a tale of 2 cities. You've got office on one side, which is really struggling, and then on the other side, you have industrial, which has come off 2 of the best years it's probably ever had. I've been in the industry for 18 years, and I haven't seen 2 years that have been as extraordinary as these past 2 have. So office is really struggling. Industrial is going crazy, although there's been a pullback over this last year for overlap on some of the reasons you mentioned. Capital is getting more expensive. There's uncertainty about the economy. So there has been a pullback, but it still seems to be quite strong. Where do you look at industrial through the same objective lens of identifying areas of office which might be troublesome? Where do you see industrial?
I think my view of industrial and what we've experienced is really this. Unlike office, industrial demand, as you know, continues to be very strong. We've had record years in our markets of net absorption in the last couple of years. And I think the thing right now, if office has stage 3 cancer, industrial has a head cold, And the reason I say that is that industrial, the cost to build, inflation has made the cost to build jump. And then with borrowing costs being as high as they are, for the first time in my career, we're seeing that the cost of debt is actually higher than return on cost. And so you've got a negative leverage scenario. And I think that has caused most, if not all, of new industrial development to grind to a halt. In the last 6 months, it's been very, very difficult to get anything off the ground for that reason. But again, industrial demand is great. Tenants still want it. Now there's a concern, despite having a lot of inventory coming online, there's a concern that, hey, if we don't keep building industrial, there could be a supply shortage in the near future. So again, the capital markets have really frozen in a sense, and are leading to these interruptions, if you will, in the development process on the industrial side.
I want to pivot a little bit and get into that investment side, because that was a major theme of your book. Is you started Trinity Partners as the brokerage, and shortly thereafter you started Trinity Capital to start investing. And there's a line that you had at the end of the book that had you not done Trinity Capital, had you not invested in real estate yourself, you would have still had a comfortable retirement, but investing in the real estate allowed you to have you have multiple of that, is what you mentioned in the book. So I think that that's a very important part. It's something that I ascribe to myself, trying to build my own portfolio. I guess take me back to when you made that decision, because that comes with a lot more risk. You now have a newer company in brokerage, you're building that and scaling that, and then you also decided to add more to your plate. If you didn't already have enough in the brokerage space, you now decide to add even more and start an investment group. What was the decision at that time? Because you had a lot of foresight. So what was going through your mind with you, Peter, and David at the time?
Well, we started the investment business very early, only 3 years. So we started Trinity Partners in 1998, 25 years ago. We started the investment business in 2001, just 3 years after. And, I'd love to say that in hindsight, we had this great intentionality, and we did. We were strategic about it to some degree. But honestly, part of the motivation was that we would see our older, successful peers doing the same thing. And we knew that from a learning perspective, from a, just getting to be better real estate professionals, that was a more complex step. And, we were competitive. We wanted to do the same thing. The other characteristic of our early days on the investment platform was that it was really just a side business for recycling the profits from the brokerage company. So we would just use our own capital and do small deals. But then eventually we sort of realized, we don't want to be in our 50s doing brokerage deals every day and rely on that for our income only. We want to both build a business, a brokerage company, and we want to have this investment business because, we had big financial goals. So it eventually, over time, morphed from being a side business to being a business that really stood on its own and did very well.
I don't know if you know Robert Thornburg with SIOR, but he always said brokers die broke. Brokers die broke. So his big message, much like yours, is that you don't want to be doing that to live off when you're trying to retire, as opposed to actually building some meaningful net worth. Where do you see, because I've noticed this as well, even with the small portfolio that I have, is that trying to add property right now is actually difficult, because for the most part, you're dealing with negative leverage. So there's cap rates have had major compression in industrial. I think you mentioned that you sold a property. It was a home grand slam for you guys. It sold at like a 3.53 cap rate. So there's this massive downward pressure on cap rates, but we've had rising interest rates right now. It's very difficult to get a deal to pencil. If you were starting your investment career right now, how would you be trying to structure it so that you can actually do it without making huge mistakes?
I think the reflection I would have on that front is I think back to 2008, and we were all very fearful about all the changes that were happening. And then 2009, the skies were the darkest, and we were just itching to do a deal, right? To do deals and to take advantage of the distress. But in 2009, we ended up not doing a single deal because valuations were falling so aggressively. And what I would say to someone starting now is just understand that it takes our markets a year or two to reset. We've had a big blow to all the markets with these interest rate rises. Forget all the other factors, the pandemic and everything else. And the e-commerce and the industrial side, the interest rate increases have really reset. And you know how long it takes for buyer and seller to come to a point where they meet when cap rates go up 150 basis points, but the seller thinks, oh, it's still worth a 4 cap. Well, no, it's not. So it takes a while to reset. There will be distress in the market and there'll be a lot of opportunity, but it's going to take some time to unfold.
That's really great advice. And that's encouraging to hear that in 2009, you paused purchasing, even given the scale of the amount of stuff that you've bought before and subsequently, you paused.
But we didn't want to stop in 2009. We wanted to do deals, but some wise investors said, guys, wait, be patient, because it's going to take some time.
There's a line in the book that you said, which people are probably familiar with, but it's like trying to catch a falling knife. You just don't know when to actually grab it. So that, yeah, a great insight on that. And on the brokerage side, because there's a lot of parallel there, what would you recommend to brokers right now that are perhaps, if we are going into a similar type of situation as 2008, 2009, and every recession will be different, and we have no idea what this one will look like until we do a post-mortem down the road. But if we are going to go into something similar to that recession, what would you be recommending to brokers right now on how to prepare for that and how to navigate through these coming couple of years?
When I saw that question early on, what jumped out to me was something my business partner, late David Allen, used to say, and that is change creates opportunity. When the markets are steady as she goes, there's not a lot of change. It can be a tougher time to find that opportunity. But when you have a lot of change, tenants may be subleasing space. Markets are going to change. And I remember when I was a young broker, very early in the business, I ran into a senior guy in July, passed him on an escalator. And I said, how's your year going so far? Right in the middle of the worst recession ever. And he said, great. I'm done with I've met my goals for the year already, and it's July. And I thought, holy cow. And you realize brokers can make just as much, if not more money during a down market because things are changing. And so I would say, stay optimistic. There'll be a time when I remember certain times when it would freeze up for a while, but then it'll come back around and there'll be a lot of opportunity.
Great advice. And David had a lot of great nuggets in there. What was it like, and shifting gears again as well, when David passed away? He was one of your founding partners. You were very close with him. You also mentioned that you didn't have time to grieve because, or at least let the losses sit in, because you now were faced with running a company with 2/3 of the manpower. And you had to pick up the slack from now having one of your partners no longer there. That had to be a huge loss, understating the obvious. how did you get through that? What was, because I think that every entrepreneur, every broker, every investor, they see the rosy side of the business. They hear your success story and everything went well, but you had loss. And there's another one that I want to talk about after. But how did you get through that process of losing David?
I think I referenced this in the book that, um, we had two companies to run, Trinity Partners and Trinity Capital. And we were very, I won't glamorize it. It was very scary. And David was the wisest. He was 5 years older than I was. He was the big brother that we would go to whenever we had the most difficult problem. We'd say, David, what would you do? And he'd usually respond, and we'll have had an experience that could help us with that. But what really turned things around for us was bringing in the younger partners that we had. We had a half dozen other younger partners. And, honestly, we had a bit of a provincial mindset as entrepreneurs when it was the three of us. Sometimes it was hard for us to see beyond that. And bringing in the younger brokers really unleashed this growth in our businesses. And part of it, the economy was fantastic then. So we were lucky. We were really entering sort of the 2014, 2015, 16 timeframe. And our businesses just took off, in part because we gave other younger brokers, younger partners, a responsibility to run their businesses, and they did a great job.
Yeah, that culture was something you noted a number of times in that book. And I think that that's actually worth touching on, because there was a few main points that you had when you set up Trinity, and it carried through, it just became part of the ethos of the company. Can you share those three ideas that drove the company?
Yeah, it's funny. We didn't intend in the beginning we didn't say we're going to create the culture. We just said, these are three things that are important to us and that we want to sort of hold on a pedestal. And the first was family first. The second was have fun and not take it too seriously. And the third was have balance in our personal and professional lives. We wanted to be home for the kids' birthday parties. We didn't want to have a corporate services business where we were on a plane and traveling 4 days a week. We intentionally set up our business to really, everything below. Those were the first three things in our business plan, and all the detail was below that. So we wanted to set it up with a culture that was open, that was fun, and that was the opposite of the larger firms we had come from before.
And I think that that's what most people, especially those that aren't already in the industry, that's what their perception of the industry is that it's, you get to the office at 7, you stay until 8 o'clock, you're expected to be in on the weekends. And there is that misconception, I'd actually call it, because I think that there are a lot of firms like yourself who does prioritize a healthy, balanced lifestyle where you are spending time with your family, because there's nothing worse than working for 30 or 40 years and your kids don't know you, you're alienated from your wife, you have no family, friends, you have no hobbies. That seems to be the wrong way of working for something, just to end up in a grave eventually anyways.
Well, it's funny, and I think I reflected on this in the book, that what we embraced and what we created at Trinity could now be called a millennial lifestyle. That's what millennials seem to embrace. They don't want their lives to be all about work all the time. And we just did that 25 years earlier. And over time, we really attracted a lot of people that felt the same way. But there was one distinction that I added in the book, and this wasn't part of the business plan, but it was sort of the undercurrent of our culture. And that is that if there would have been a fourth thing below family first, have balance, have fun, it would have been that we were uber competitive. we hated to lose more than we loved to win. And, a lot of us were former athletes, and, we took the competitive spirit from the ball field to the workplace. And a lot of the people that were attracted to Trinity, we didn't just want to be a lot of nice people. We wanted to win and be the best we could be.
I'm glad you added that in there, because it can't be you can't go from being a very hardworking, competitive firm that people might think of when they think of commercial real estate to being a tech firm where everyone's just playing ping pong and sitting on couches. There has to be a balance in there. And myself personally, I would much rather have a broker that was willing to work really hard, 40 to 50 hours a week, but love their life, than have a broker that's willing to put in 80 hours a week and hates it because they don't see their kids, they don't see their family. So I'm with you. There needs to be that competitive spirit, because this is a competitive business, but that balance is also very important. And on that balance topic, I wanted to talk about Buster, because this was a very prevalent part of the book where you talked about homelessness, and he didn't call himself as homeless. He said that he was living on the street because he didn't want to have the moniker of being homeless. Let's go back to your involvement on the charity side. There's a charity that you've been involved with at the board level. You've supported it, called Roof Above, basically about ending homelessness. What was the appeal beyond the obvious? Because everybody feels sympathetic to the homeless. What drove you or compelled you to want to get involved in trying to combat that problem?
Well, I realized this in hindsight. I don't think I really realized it as it was happening. But as I wrote in the book, I met a homeless gentleman when Kim and I were first married back in 1990. And I would see him downtown. I'd see him when I was coming, going to work, coming from work. I'd see him in my neighborhood, and we got to be friends. And later, through my church, we had the opportunity to house some homeless folks through a program called Room in the Inn. And I think that's a national program here in the U.S. I don't know if it's in Canada or not, but that sort of led me onto a path where, with charitable work, everybody goes to where they're drawn. For some, it's early childhood education. For others, it's family housing, or whatever the case may be. It's affordable housing. And so you just find to where you're drawn, and that's where I was drawn.
So tell me about Buster, because you took him for lunch on his birthday every year, in addition to other lunches, and he passed away a few years ago as well. But tell me about that relationship, because that seems fascinating that you were able to develop, because you called him a good friend during that time that you got to know him. So tell me a little bit more about Buster and just how you got to know him.
Well, of all the people that read the book, I'll say this: you're the first person to ask me about the homelessness initiative and Buster and others. A lot of other people really appreciate the real estate story, but maybe they enjoyed that chapter, but they've never mentioned it. So thanks for asking. Buster was a guy, despite being a lifelong alcoholic and being homeless for about a decade, he did find housing through the Charlotte Housing Authority. And, he remained very grateful for the help I'd given him over the years. And we just stayed in touch. He was a nice guy, and a lot of the neighbors knew him. He wasn't begging. He was just a local guy that everybody knew. And it was a lot of fun to be around.
And at his funeral, you had a chance to meet his family and discovered that all of his siblings were professionals, like pharmacists, and I don't remember the exact professionals.
Yes.
Yeah, but all professional. And it must have been heart-wrenching seeing their brother go through a problem that just came from alcoholism, in this case, to being homeless. So I think that does really put it into context that behind every person that's homeless, there's a family, and there's a family that's probably exhausted everything that they could to help them. But if someone just gets past the the point of help and they find themselves in that situation. It needs people like you, and it needs organizations that you worked for to really give them that lift. And I'm sure that was a life-changing help that you gave them, not just in being a friend, being someone to talk to, because I'm sure that was great on his end too. I'm sure he holds you in super high esteem before he passed away. So good on you for doing that. And I encourage people that don't look at someone that's homeless as someone that's just a drug addict or an alcoholic. Someone that could have very easily come from a family of successful people. For various reasons, they found themselves in that situation. They could just use a lift. So you do mention that all proceeds in this book are supporting Roof Above. So I'd encourage people to check it out and read this book. If you got a few minutes, I still had a couple more questions, if that's good for you.
Yes, I'm good. I'm great.
So given your success in brokerage and investment, I guess I'd like to end on some advice that you would have for both groups. And we'll start with brokers. And this can be, you can make this as general or specific as you want, because I'd just like to get your thoughts. You're a broker right now, and it could be somebody that's been in the industry for a while. Perhaps they haven't gone through a recession. Someone started in 2010. They might have been 13 years in this business without going through a down cycle. Or it could be someone starting right now, and they're saying, and their family's saying, you're getting into real estate during the worst possible time. What are you even thinking? But they're stubborn and they want to go for it anyways. What do you say to a broker? What would you recommend to a broker as we're going into this time? You touched on it earlier. Sorry, before you get to your answer, because you touched on it earlier about change brings opportunity. Dave mentioned that. But what would be your game plan? What would you say to, this is what you need to focus on, this is what you need to work on, here's the mindset that you need to have? I guess I'm basically asking you for a roadmap for these brokers that are coming into this position so that they can navigate their way through and be successful on the other side.
I would say this, and this may sound a little obvious, but for some it won't be. Be strategic. Really think. This is a thinking person's business, not just a doing person's business. And a lot of us spend time just dodging trees in the forest. We run as fast as we can through the forest, and we hope not to hit a tree, but we rarely stop and look above and say, are we going in the right direction? Is this, like retail, for example, was just a gangbuster business until about 7 or 8, 9 years ago. It's actually come back lately a bit, but be aware of what's happening in the macro environment. Is this the right segment that you're in? And are you chasing the right segment of the business? And then the second thing is, really create a vision for yourself and for where you're going. You mentioned a roadmap. I think a lot of people just show up and start doing deals, and they don't set measurable goals. And one of the ways you do that is saying, as a broker, every year I'm going to increase my minimum deal size. And it's hard to turn down a smaller deal when it's a sure thing. But if you want to make more money over time, you've got to increase that minimum deal size. You've got to track where you are. You've got to know when you're 3/4 of the way through the year or 2/3 of the way through, how am I in relation to my goals and my pipeline? And I really thought that way throughout my whole career.
Great advice. And parallel to that would be the investor. So it can be an investor like myself that has a small portfolio and still nervous about what happens with interest rates. Can be someone that's start considering investing, or can be someone with a larger portfolio that might even have a correspondingly higher amount of stress just because of their debt stack. What do you say to investors that are about to go through this a period of time that I think is going to be tough?
One thing I did not really reflect on or comment about during the 2008 and 9 timeframe is that, we were very actively asset managing our portfolio. And we worked 3 times as hard for half the results during that time frame. That really applies to brokers and investors. But with investors in particular, when I think about investing during the good times and bad times, you're really just, the whole process is about managing risk and mitigating risk. You try to stack the odds in your favor through signing up great tenants, through getting the best loan you can get, through finding the cheapest equity you can find, in the best long-term relationship with that equity. You're always managing risk, and you're just going to have to manage it a lot more aggressively as you go forward for these next couple of years. But then, that's sort of the negative outlook. The positive outlook is look for opportunity. There's going to be a lot of opportunity for investors in the next year or 2 or 3. And, I love the Warren Buffett philosophy of, sell when others are greedy and buy when people are fearful. So it's very hard as an investor to have a positive outlook and be willing to pull the trigger when everyone around you, the sky's falling. But that's when you make a lot of money.
Yeah, well said on that. So finishing off, you're in retirement now. It's that's how the book naturally progressed. Semi-retirement for a couple of years and now in full retirement. What's life look like for you right now, and what are you doing on a day-to-day basis? What do you have planned for the future?
Fortunately for me, I'm a guy with a lot of hobbies.
Mm-hmm.
I still
Fishing?
run a lot. I'm a big fisherman. One hobby that I'd call it a hobby. I still do a lot of nonprofit work, but I've spent a lot of time mentoring real estate professionals. And through the book, I've had firms from 10 different states reach out and say, these are guys in their 30s and 40s that say, we're trying to figure out how to raise a fund or how to do this or that. How'd you open a second office? How'd you grow in this way? And in many cases, they've flown to Charlotte and we've had dinner together and just talked about these issues. So mentoring has been fun. I'm also mentoring MBA students at my alma mater, University of North Carolina. So it's been a fun year, 15 months since I retired.
Yeah, that's the best retirement is where you don't just sit on a couch and watch TV, but you follow your passions and do things that you really wanted to do that are rewarding. And I know that when I started reading your book, I was 3 chapters in and I thought I have to reach out to Gary. I have to have Gary on my podcast. And you were very gracious to agree to it because I was prepared to fly to Charlotte if I had to get to do a podcast in person. But you were very gracious to accept. And like I mentioned to you before we started, I just finished the book last night and I was powering through it. Probably the quickest I've read a book, actually. As I mentioned, I dog-eared a ton. I highlighted a ton. This, for anybody in commercial real estate, no matter what your vintage is and how long you've been in it, or whether you're even considering getting into it, this, in my mind, it's the gold standard of books for the industry. So I really do commend you for writing such a great book, and I really do want to thank you for taking the time to do this. I could tell reading your book that you are a giver's gain kind of mentality where you give a lot back and you've been blessed as a result. But it really shows. It shows in the book. It shows you just taking the time to do this, and it shows even in our chat today. So I want to wrap up by just really giving you a heartfelt thank you. Thank you for writing the book. Thank you for agreeing to be on this podcast and sharing your insights. And I hope we can keep in touch down the road as well, because I'd love to ask you a question or two down the road.
Reach out anytime. I'm around.
Okay. Well, thank you very much again, Gary. Very much appreciated.
Thanks for having me on. It's been a pleasure.
You could probably hear my enthusiasm for just getting to talk to a guy like Gary, who's had so much success, yet is still so humble and so giving. So in the spirit of Gary being such a giving person, I'm going to give away 5 copies of his book, the Creating Trinity. And all proceeds of this book are actually going to a charity that he's involved in, called Roof Above. So I'll buy the books. I'll buy 5 of them, and I'll ship them to 5 people. There's some stringent giveaway guidelines that I have to adhere to. So it has to be in North America, excluding Quebec. It's a different topic on its own. But anybody in North America, excluding Quebec, you have to be at least 18 years of age. And to enter, all that I'm going to ask is just first 5 people to leave comments on here and leave the hashtag Creating Trinity. Let's see if we can help get Gary some even more exposure on this. So leave any comment that you want. Creating Trinity. Have to be in North America, excluding Quebec. You have to be 18 years or older. And I'll put full terms of the giveaway in the description as well. And if you haven't won, if you're not one of the lucky ones to win, I'd highly encourage you to check out this book. As I mentioned, I've read a lot of books. I've devoured pretty much anything with commercial or industrial real estate in the title. And this is my number 1 book for the reasons that I mentioned. So really do want to thank Gary again. If you got this far, Gary, and you're not tired of my voice already, I really do want to thank you personally and with a heartfelt gratitude for taking the time to do that. And thanks to everybody who tuned in. Good luck to everybody who stayed this long, and one of the first 5 to get in. I'll need your details. So if you do comment first, just pay attention as I reply, because I'll give instructions so that I can get your details to mail to you. That was a long-winded outro. Thanks for sticking around. Thanks, Gary, again. Have a great day, everybody.